And you know that sound. That means we are live on our halftime report here, tackletrading.com. It is Friday, 12/28, 2018. We got Coach Tim, myself, and my brother Matt here today. Matt, how you doing this morning?
Doing real good, Tim. Excited to be here with the crew.
Let's rock and roll. Obviously, the markets are finally dojiing. We were talking about it in the production, and the reality is, Matt, it's been a few weeks since we had a doji. In fact, I was looking at the S&P trying to count it back. When was the last time we actually had a small range candle on an entire trading day?
Oh, 10 trading days ago, I would say, December 13th, Tim. Right here, as the market is approaching the support level at 2,600, you had a couple days, and when I say a couple days, it still moved from the top to the bottom, 26, about, I don't know, 50 points on that one. But on the next day right here, T, right there, a little inside candle, kind of sitting at that 20-day moving average. That was the last time you really had some type of low volatility trading environment. So it's been about a little over 2 weeks now.
Couple of weeks on the market, obviously, since we've done this. Now, it's not done with the market yet. We easily could rally or sell from here. It does feel like it wants to lighten up a little bit as we head into the weekend. I feel like traders are probably a little bit tired, Matt, at this point, with the volatility going crazy. I know I am.
Yeah, I think we all want a doji. I'll tell you, I want a doji just from a trading perspective. I want a doji because it's coming into resistance, and a doji at resistance with a downward movement in price is a good trigger on the downside.
You know, briefing.com had the headline perfect this morning. Extreme volatility this week has provided a lack of buying conviction. Even though we are in a slight green candle, there is really no follow through here, Matt. Resistance at 2,500. I know the old support point on the S&P is at 26. Let's start by breaking down the chart technically. Do you have support obviously down at 2,300 in that zone?
You got to put support right here at the low of the pivot point, 2316. But you have these two candles right here, and if you drop it down into an intraday chart, I'm just going to kind of look at that 15-minute chart here, Tim. You got a pretty clear area of support right here at 2325. And so 2325 all the way down, you got to use whole numbers these days. I mean, that's the market has proven to slow down at whole numbers. That's why you had support originally at 2,500 to 2,530, and that's where you now have support here at 2,325 by 2,300. So yeah, that's where I would put support level is 2,300 to 2,325. You're currently at resistance here at 24. You're currently at 24.95. I have resistance at 2,500 by 2,530. We've talked about that level of support in the past, and as you can see, if you need the reminder, that's where that old pivot point back here in February was. You also had a lot of action right there in the 2550 level back here in April as well. So you have that resistance, and it's going to be interesting, Tim, to see if we can clear up above the resistance. I'm not sure what the best bearish retracement is here. All I know is this: it could retrace anywhere between 2,500 and 2,600 and still be a bearish retracement. So at this point, you're finding resistance. You're coming into the end of a very, very volatile week. Not a lot of economic activity today, and I think there's a little bit of mindset going on here. The fear of missing out, and we know what that is, Tim. What is it? The FOMO. We call it the FOMO. What is that?
Well, when investors and traders, are seeing something else or somebody else making money in an opportunity, they, have that fear. There's an emotional response to it. It pretty much happens with any explosive rally like Bitcoin, some of these pot stocks. You'll have casual investors. They have those FOMOs. But even veteran investors and traders have a fear of missing out as well. Mm-hmm. I think a lot of traders, Matt, don't want to miss the opportunity to make money on a bear market crash. I know I've heard that plenty of times in the last couple of weeks.
But it's just not the fear of missing out on that next price movement to the downside. It's the fear of the snapback rally by the entire investor community. Yeah. And so you have the fear of the traders missing out on the next big bearish movement. You got the fear of the investors, missing out on a snapback rally that just moved 10% off, from basically from the lows of this week all the way back up into the 2,500. So you're moving up about 7% this week. So you do have that fear there as well. to me, you can get caught up in the headlines. I'm going to focus on the price action, right? And if I get a doji today and I get a downward movement in price coming into the first of the year next year, I think that's a good trigger. If we continue to fade up into 2550 to 2600 and we pivot back down at that point, I think that's a good trigger. So I think you have to be a little patient right now. Don't be too quick on pulling the trigger. But if you get a close underneath the low of any price action between now and over the course of the next week between now and 2600, I think that's a good trigger.
I agree. I mean, any confirmed trigger point from here on any of these candles would be a good trigger. 2500, 2550, 2600. It could even rally to 2650, Matt, and I still think you're at a good trigger point. I know you got a falling 50-day moving average up there at 2666. By the way, real quick, couple of housekeeping items as we always get started. Number one, it's Friday Fun Day, and we had a poll out there on Twitter. Matt, what's our topic we're going to cover today? Cody, do you have the results of the poll?
It was between straddles and it was between
Bollinger Bands. They were close.
They were really close, but here's the problem. It's perfect timing to start putting on straddles for earnings coming out in late January to early February. And earlier today, as I was preparing for the show today, I ran a scan where I pulled up 100 stocks that were basically fit the guidelines of what a straddle would be between late January, early February reporting dates. Large cap stocks over a million volume, obviously optionable and shortable. So they meet all those different requirements. And Tim, I didn't find one stock that had volatility where it was under the mean from an implied volatility perspective. In fact, most of the stocks were well above the mean. In fact, most of them were somewhere towards the higher end of their typical implied volatility ratings. And so it's very difficult to look at a straddle or a strangle right now when you're already dealing with volatility where it's too high, to be perfectly honest with you. Should we wait to see how long he figures out he's on mute?
I could have let that run a little bit longer and try to go with a joke there, but I just unmuted. It's a really difficult environment just to be buying straight long options, straddle or strangle, by the way. There are creative ways to play the volatility build. We're not doing that today in the halftime crew. I think it's a little bit more advanced than what we want to do. So I think probably straddle. I know it was a close toss-up, Cody, straddle and Bollinger Bands. Matt, which one do you want to talk about? We could we could do a straddle.
Let's talk Bollinger Bands. Let's talk Bollinger Bands. It's just it's a better topic for the current market condition. And quite frankly, Cody asked us, he says, all right, how many strategies you guys looking to play right now? And both of us were like, none. Volatility is too high to go out there and buy a call and buy a put. And unless you get some strong directional movement, and you certainly could get that in this market condition. But a typical straddle, when you're talking about earnings, you're trying to remove delta from the equation. You're trying to mitigate theta by an increase of volatility and mitigate delta. And because, where volatility is right now, all of those straddle plays would be much more directional plays than they would, bidirectional plays expecting a price movement radically one way or the other than they would a pure earnings play. So let's talk about Bollinger Bands today.
And the democracy is overthrown.
Yes.
Well, here's the thing. We had a recount because I originally voted for a straddle and so did Matt. And so we're changing our vote. And so that would throw
Hey, and I didn't vote either. So,
yeah.
Listen, we're not going to count the hanging chads on this one, boys. Let's move on.
All right.
Well, something that does need to be covered from yesterday.
Stake bet.
Tim won the bet.
Stake bet. I do want to reference something here, Tim. Okay. We made the stake bet right. I want to say right into, where was it?
About 11:30 or so. So right.
11. Where would I be here? So.
Yeah. Keep going.
Yeah. Here we go. About right here. Right?
Yep.
Okay. So this is where we kind of made our bet right there. We're sitting at support level, and I made the comment, well, you're sitting at support, so you got a little bit of an edge. But I felt like if we broke that intraday support, I was going to win that stake bet.
Hey, you know how many ifs and buts happen when things don't trigger?
Yeah, tons. But here's my point here. Here's Thursday. Look at this clear break of intraday support. Literally within like 5 minutes after me and Tim made that stake bet, I was like, oh yeah, I'm winning this one. Okay. Walked away for about an hour. walked away for about an hour, came back to the market to check the last hour in the trading day, and we're all the way back up here. And I'm like, oh, I hate this market right now. I was more upset about losing that stake bet than any whipsaw trade I've had in the last 3 months, Tim.
Well, here's the thing. We can have a steak cook-off. I know that you don't want to do it on the Traeger, but you can come over. We can do it on my grill. The other thing is, if and or buts, if the Bears would have played defense in the fourth quarter, we would have beat the Dolphins in October as well. But that didn't happen either, and I had to pay up on that.
If the Bears would have played an NFL football game at that day, they would have won that game.
Yeah, it did not work out. We did not have that. 2,500 on the S&P. Obviously, we're sitting there stuck. Market maybe at doji's all day. I don't know. We're going to keep updating it as we go, Matt. Let's keep working through the different markets. Obviously, the next one I want to talk about is going to be the Dow Jones Industrial Average. Large cap stocks had led the way in 2018, early in the year when the market was strong. And we kind of went out of favor here, obviously, recently. And now this rally is bringing us into very, very clear old support points. Now, the question I have on the Dow, Matt, as you break down the chart, trend pattern levels, all that kind of stuff, is that level where your line is at 23.5, or is it up as well at 24,000? I mean, there's a couple of zones in there that could be playing in.
It's the exact same thing as the S&P 500, Tim. And this is what happens. And I've talked about this in the past, but this is what happens when you get volatility and when you get quick price movement. That is not a typical price movement in the marketplace. You get these expanded zones of resistance. And so as you can see over here, you got the same type of levels of resistance between 23,100 and all the way up here to 23,500. That's kind of that current zone of resistance. But Tim, it certainly doesn't have to stop there. Now, if it does and I get confirmation, am I going to short? Yeah, most likely. But it doesn't have to stop there. It can come all the way back into the previous pivot point right there at about 24,000. You also have a downward moving average right here that could act as a level of resistance. So remember, when you're talking about resistance and support zones, all of these levels are what we call a catalyst. They're not actually resistance until the market pivots. And then when the market pivots, at that point, we know that's a confirmed resistance level. So when you're trying to assess where this retracement can fall into or where it could stop before we see that downward movement in price again, you got to go to your catalyst. And your catalyst are your previous level of resistance, or excuse me, your previous level of support, which is right up into this range between 24,000 and right about 24,300. So you're looking at that as one potential catalyst. You also have this downward moving average that could be a potential catalyst. You also have the previous levels of support over here that could be those catalysts. And so when you're kind of assessing where this could slow down into, right now, I'm looking at it saying, okay, it's coming into that previous channel back in old February, right around 23,000 to 23,500. It's starting to slow down in that range. If we see a downward movement in price, will I call that as resistance? Absolutely, I will. But at this point, we haven't seen that downward movement in price, so we can't technically call that as a pivot point yet. We're just preparing for that. You also have Fibonacci zones that a lot of traders will use. I know you don't like them, but a lot of traders will use them, especially from a retracement perspective. And Tim, remember what we talked about with the Goldilocks type retracements, either bullish or bearish. It comes into that 38 to 50% zone. You have those downward movements, moving averages. You're coming into that previous pivot. So you're starting to see the early signs. And when I say early, maybe 1, 2, 3 days, but you're starting to see the early signs of this market, which was amazing the last couple trading days, to watch this kind of slow down into that range. So it is slowing down, coming into a resistance zone, but we have not confirmed yet.
Yeah, obviously, same setup as the S&P, like you're talking about, a lot of different technical catalysts that could drive it. And, we do have an open market on Monday. A lot of people, even myself, I was talking to Cody, I'm like, oh yeah, last trading day of the year. And he's like, no, Tim, we're open on Monday. And I'm like,
no, we got a little price action on Monday, kind of like Christmas.
Well, no, actually full day on Monday as well, not even a half day.
Oh, yeah. I thought we were closed at 2:00.
New Year's Eve, markets will be open and driving and moving things around. So you still have an opportunity for more volatility before the end of the year. I will tell everybody out there this, one thing that I was talking to Matt about, the very beginning of the year can be really strange. I've seen some crazy activity coming into January's, Matt. If you're an asset manager on Wall Street, what are you doing as you head into the new year? For me, I'm hedging, right? Looking to pick pick up safe haven assets?
Yeah, if I'm, do I have to answer honestly? I'm going to answer honestly.
Yeah.
If I'm a money manager right now and I understand technical analysis, which a lot of money managers don't, I'm locking in profit right now, to be perfectly honest with you on some of these. I take the 5% snapback and be able to close the year out on a positive note. I get to show my investors that, maybe I'm only up 1 to 2, 3%, but I get to show them a positive number at the end of the year instead of a negative number. Yeah, I'm locking in profit and I'm reassessing coming into January. But, January is a barometer for the market. There's about, and quote me on this, but I think it's around 80% of the time, wherever January goes, the market goes.
Yeah.
So if we see a downward movement in January, typically we see a downward movement in the market for the rest of the year. So in terms of that, yeah, I'm looking at that January barometer, but there's so many different things in January this year, Tim. I mean, you're going to see the trade wars start to come back up into focus. You're going to start to see earnings season come out for the fourth quarter. You're going to start to see retail sales numbers coming out for this December holiday. So, I get it. There's a lot of market volatility coming into it, but my eyes and mind are focused on all those things coming at us in January.
Sure. Yeah. And I'm just going to trade obviously what we see. We're going to do it on a day-by-day basis. One year that did buck that trend was this year, Matt. January of 2018 was an extremely bullish month. And then the trade wars happened and all that kind of stuff.
Well, it wasn't just that. We've seen a couple times in recent history, and let me get a little bit more data here. Let's go to a 10-year chart here on the S&P. Okay, there we go. So this was this year in January. Obviously, you had an extremely bullish year, and then just get smacked down in February. So obviously that bucked the trend. Here's January of 2017 showing positive action. Look what 17 did. But here's the year I want to talk about that really kind of bucked that trend here, Tim. This is January of that 2016 year. And if you'll remember that January of that 2016 year, we saw a very quick, rapid 10, 12, 13% downward movement in price, and then you found support and then had just a pretty good year throughout the rest of the year. So when you're talking about a lot of these historical indicators like the January barometer, Tim, that goes back to 1923, right? Mm-hmm. I mean, that goes back to the 1920s, and it's just a different market condition today as it was over the course of the last 100 years or so. 2 out of the last 3 years, that January barometer didn't work out in any capacity. One snapped down, came all the way back up. The other one went up, came all the way back down. So a lot of these historical, norms or cycles or patterns or seasonality that we typically will rely on as investors and traders, you can throw it out the window a little bit in this market condition.
I agree. This last month, by the way, I saw some statistics that Cody put into our halftime prep. This is the worst December since 1931 when we started the Great Depression, right? Mm-hmm. And as a matter of fact, according to Bloomberg, we've actually seen $7 trillion in stock value go away since the sell-off, So some pretty startling stats, Matt. Do you think any of that, just that real impact in the emotions and the losses can bleed into this next year and really just push us into a full-blown bear market sell-off?
Yeah. I mean, am I ready to project a full-blown market sell-off in 2019? I don't know, Tim. I mean, does it have the makings? Does it have the trimmings? Does it look like it? Does it feel like it? Are we at the top of the market cycle? Are we raising interest rates? Are there massive geopolitical situations that could impact this? And quite frankly, are we seeing very similar rapid volatile price action up and down that kind of, signifies what a bear market is all about? Yeah, I mean, you got all the makings of it, but the hardest part is, what is the Fed going to do? So if we start to see real volatility, guys, I mean, think about it for a second. Year over year, Tim, we're basically flat. Okay, I know the craziness of the last 3 months, but year over year, we're very, very flat year over year, and maybe down a little bit depending on the index, maybe up a little bit depending on the index. That's not real volatility, Tim, year over year. I mean, it really isn't. So in the face of real volatility, VIX spikes to 50, market sells off 12% in a week. is the Fed going to start continue to, unwind the balance sheet by $50 billion on a monthly basis? Is the Fed going to continue to raise interest rates in that environment? I don't think so. And so if the Fed comes out with, wild action and a repeat of quantitative easing and zero interest rates or a lowering of the interest rate, could that stave off something happening in the stock market? Absolutely. So does it have the makings? Yes, it does. But am I going to sit here on December, what is today, December 29th? 28th. Am I going to sit here on December 28th and say the market's going to crash 50% next year? No, I'm not ready for that.
No, I'm not ready to project either, by the way. I'm going to take the entire weekend and really think about it. We've got our predictions podcast on Monday where we're going to lay out what we think is going to happen throughout the year on the dollar, the market, S&P 500, crude oil, all the different products.
I think Mark has like 25 data points he wants to project or something like that.
Hey, buckle up.
We told Mark to start producing the podcast, and Mark's like, "All right, guys, you want me to produce? Here's 4,800 different line items I want you to predict for 2019."
Yeah. Real quick on the internals on the Dow, 21 companies going up, 9 going down. You do have a little bit of an edge on the bullish side. Go back to a daily chart, Matt. Let's run down the top 5 gainers on each of these different indexes. Quick rundown of the markets. Intel, actually a company I'm interested in for 2019, by the way. We've got it on the early list of potential candidates for the
down to 93. Down to 93.
I like this company.
And so do I. For all those guys that like the pot stocks, 3 of them made the last 150. 3 of them got axed on the cut down. Yeah. They're just not there yet.
Yeah. We are not ready to do that with those companies. There's no doubt about it. They're too early in their cycle. There's too much volatility.
We're not ready to put a negative 3,000 PE ratio on a Tackle 25 covered call stable list. No,
we're not. Intel looking neutral though, Matt. Some strength in that stock here today, up 1.8%. Walmart up 1.2%. Actually, the chip makers are looking good. Applied Materials also looking good today. We'll look at that in a minute. AMAT coming back up off the bottom, but in a bearish retracement. See, this is the hard thing with any of these rallies. It's just going to bring you into falling moving averages and a nasty trend.
Mm-hmm. Yeah. No, it is. I'll tell you the number one pattern you'll find on the scanner reports this week across the board. Bearish retracements. That's the number one pattern.
I found a bunch of them.
Oh, they're throw a dart right now. They're out there everywhere. Yeah. Triggering is going to be a little bit more difficult on those, but we'll get you some good scouting reports, no doubt about it.
Yeah, Pfizer, Boeing, and JP Morgan round out the top 5 on the Dow. Goldman Sachs is the biggest loser on the other side of it. Pfizer here.
Take Pfizer for example, Tim.
Yeah.
Pfizer was one of those safe haven companies that, didn't get just absolutely beat up and slaughtered. Pfizer having a really good week here, going from 40.50 all the way back up into that resistance channel right there at 43 to 43.50. But Pfizer now starting to slow down, coming into old breakout channels in a downtrend. I mean, Tim, that's a kiss of death on a daily chart.
Yeah, I agree.
Not as strong as the kiss of death on a weekly chart, but it's still a kiss of death.
Biggest gainer on the S&P, by the way, I have to give credit where credit is due. It is GE. GE up 3.5%, $7.50. You buying down here, Matt? W pattern. W's for winner, right?
Let me jump right all over that.
What a garbage company.
Let me go borrow some money to buy GE stock. Let me do that.
Chipotle Mexican Grill hit my scan here. I made some burritos for dinner last night, and I said, who needs Chipotle? And my wife said, anybody who wants food poisoning, apparently.
Chipotle. I love your wife. That's the zinger that I'm looking for right there. Good job, Bree.
She did, yeah. Bearish retracement, though, setting up. Obviously not a strong chart. You're not going to find a lot of strong charts. Bulls are few and far between right now. There's no doubt about it. Yeah, NVIDIA looking pretty good. NVDA up 2.8%. A lot of those chip makers, Matt, are coming back up off the bottom, but in bearish downtrends and developing a bearish.
There will be a chip maker on the Tackle 25. It's just a matter of which one.
I think AMD is going to be my vote, and there might be 2, by the way. I actually think Intel and AMD both could qualify. I like AMD just because of the long-term potential for the returns.
I do want to mention, as we're going through the research on the Tackle 25, and we are making some changes to it. The Tackle 25 is going to be the core list, but there's also going to be 2 other lists that I'm pretty excited about, and they might not come out at the first of the year the same way that the Tackle 25 will. But we're also going to be putting together a top 10 list of dividend firework covered calls this is going to be the top 10 dividend paying companies that you can also do covered calls on. And we found a good 15, 20 that we liked on for that top 10 list. And there will also be a top 10 list for the crazy aggressive traders out there. Tim, I think you called it covered call on steroids list, right?
No, the dirty, sexy money list.
The dirty, sexy money list, right? So the dirty, sexy money list is a company that has massive growth potential, but also can get its face kicked in, but you can get 5 to 10% on a covered call. So we're going to have a top 10 dirty, sexy money list. Those are high beta, high volatility stocks that have very liquid options on them. You're going to have a top 10 dividend paying covered calls, and then obviously the tackle 25.
It's a working title, by the way.
I'm getting excited.
The title may change from dirty sexy money
might not change. I like that title.
I do like it.
Dirty sexy money.
Some of the companies that are down here today, Matt, URI and one of the industrials. In fact, a lot of the companies that I'm seeing set up very, very strong for these bear retracements are some of these industrial companies. Down 3.5%. Cabot Oil and Gas, COG, EQT, Range Resources. Industrials, energy, materials, I'm seeing weakness in those areas as we're heading into the weekend, and some strength in the chip makers, and a very mixed market today, actually.
Well, that's what you're going to get when you get a doji.
Yeah.
Right. I mean, we have not. I mean, the crazy thing is we have not had a mixed market for 2 weeks. Right.
Mm-hmm.
I mean, we've had a market that's been going in line with one another for now 2 weeks now. Safe havens, aggressive stocks, didn't matter. I mean, once you broke that support level at 2,600 right here, and then ultimately right down there at 2,530 by 2,500, this market's been trading in line with one another. And now you're showing, down 5 points on the day. That I was going to actually call, 2,500, look for a shorting opportunity there. But in terms
first of all, we can settle the steak bet dinner right now. Okay, we're even on steak bet dinner.
Yeah, are you going to take another bet today?
Red or green? Red or green by the end of the day. It's simple. Whatever the color of the candle is.
It literally is 50-50. There's no edge there.
Yeah, but the edge is that the
edge is you're a degenerate gambler.
Even if you lose, you win. You get a steak dinner.
Oh, okay.
That's the edge.
That's the edge.
Yeah.
All right. I listen. I'm going again. I'm going red. I'm taking red.
Down.
I'm going red.
I don't like it, but I think you'll probably end up winning that. And by the way, we still need to play Monopoly over the weekend. Be a good opportunity to grill up a steak and play some Monopoly. So
I like it
as well. S&P now did turn into the red. Obviously, we've got a mixed bag here, Matt. The energy sector is showing me some weakness, and crude oil, we're going to get to that here in just a minute. Hold off on that for now. Let's move on to the NASDAQ 100, the NQ contract, if you would. Keep working through the indexes, top-down analysis style. And by the way, Halftime Crew, welcome out. And thanks for being here. Love having you guys on a daily basis. The NQ, another retracement, Matt, pattern. I mean, we're going to be a broken record here today on the stock market. There's no doubt.
Yeah, same analysis. I mean, You're slowing down. You got a range, very similar to what you're looking at on the Dow.
Yeah, Tesla is your top gainer.
This, Tim, I will say this: if you're looking for bearish trades, today is the exact day you wanted to have.
Mm-hmm.
Okay, you did not want a 3% down day today, because here's the reality of the situation: we all would have missed that. Right.
Yeah.
I mean, because a lot of it would have happened overnight, and we're all sleeping, and then we wake up today and we're like, oh, we're already down 2.5%. I don't want to chase that. Right.
Mm-hmm.
This is the exact signal you want to see. You want to see it slow down, and you want to see a stable price action start to go below the low. So, we're not there on the trigger yet, but this is what you want to see if you're looking for a confirmation on a bearish retracement.
Absolutely. Top gainer on the NASDAQ today is Tesla, one of your favorite companies. TSLA up 4%. Not tradable.
Didn't make the cut on the Dow 25. Did not make the cut.
After a year like this, that is not going to. Although I still will say this about Elon. One of the coolest things that happened all year, in my opinion, when he had that commercial where he shot that car into space. Was that the
closure? Was it when he called that Thai rescue hero a pedophile? Which one was that again?
He had some down moments. There's
okay. Oh, getting microdosed and calling, buying your own company out of 420. That wasn't it.
Elon is the definition of a
Hold
mixed
on.
heat map.
Creating a fake company with fake tunnels, that doesn't take the cut.
Which actually might make an impact on the LA traffic scene. So it's interesting, you know, fake company, fake tunnels, but they become real. It's going to be
at one point I thought I
again.
was going to be in the rocket ship with Elon to Mars too. That didn't come to fruition.
I had a dream about that the other day. I'll have to tell you.
We'll have to talk about that.
Went to Mars.
But let me just say one thing about this. Tesla is a company that we have had on the Tackle 25 since the inception of the Tackle 25 4 years ago. Okay. This is a company that you and I bought back when it was less than $50 a share, right? I remember buying Tesla back at $38 a share. So this is a company that we loved early on. Okay. We loved early on, and it just changed. So it's a little emotional because I take a lot of great pride in that, in the Tackle 25 list, and those companies that we put on there. We take a lot of time to research those, and we start caring about them to a certain extent. So I'm a little sad about it, to be perfectly honest with you. But no, Tesla didn't make the even cut of 150 companies.
Yeah.
And by the way, it's not my emotion over this why I asked it.
Fundamental problems.
There are too many fundamental problems with Tesla.
Well, they're a debt-driven company that hasn't been able to turn that around in their production. This was the year they had to turn a corner, Matt. Now, could they still do it in the future? Of course. But for now, sitting neutral in a range, obviously moving back up today. One stock I'm very interested in for next week, actually, is AVGO. Broadcom up 1.5%. It made one of my initial scan lists, Matt, for a bullish candidate. AVGO might be hitting our reports this weekend. We'll talk about it later in our meeting. Mm-hmm. I like a breakout potential up here. You know, it's hard to find a lot of strength in the market, and this one's showing me something. I know it's hard.
Good retracement on Broadcom right there.
Yeah, it was a good pullback pivot for sure. I think we've had this one on the report a few times the last couple of months. Bear side of the market for the S&P, or for the NASDAQ, I should say. Lulu, C-Trip, Win, Take-Two, and NetEase. NTES has been there a bunch. What do we got here? Lulu was on our report list recently as well.
Keep an eye on NetEase above 255, 260.
I actually kind of like that one as a bullish breakout candidate.
I would not touch a retracement on NetEase, but a breakout of 255, 260, that's fine.
Sure. The casinos and resorts are down again here today. Win is looking pretty ugly. And Take-Two.
Now, mind you, there will be a casino company on the Tackle 25, and most likely there will be a gaming company on the Tackle 25 as well. So interested on both those two.
Yeah, I agree.
Win might be shortable soon. What was the next one?
Oh, just Take-Two, TTWO, the gaming company. Mm-hmm. Yeah, still breakdown potential down here.
Yeah, it's got to close underneath that band.
And one thing that you'll notice as Matt goes through a lot of these companies, Matt trades over and over and over again. And so he has his lines drawn, like right here on Take-Two International, the Interactive, I should say. Matt, you got to prep these trades in advance.
Yeah.
Yep. No doubt. That way, when it happens, you're not sitting there wondering, what should I do? You know exactly where you're going to pull the trigger, and you have your stop, entry, and target all pre-planned as a part of your trading plan. Give me the RTY, if you would. Let's look at the Russell 2000, talk small caps. They're fading same way the market is here today. Bearish retracement. They have been oversold a little bit more aggressively. When we do get into Bollinger Bands, I think you're going to see that it pierced the lower line quite a bit here recently, expanding volatility.
That's expanding momentum.
I agree. Even a pivot from here, though, is tradable on Monday and Wednesday, Matt.
Absolutely, 100%.
There's no doubt. RUT right here. I was looking at adding some bear call spreads on up in the February contracts and even the March contracts. I'm not adding anything new today as I'm waiting for the market to take direction and maybe even, waiting for Monday.
Maybe even Wednesday. I mean, yeah. I just don't see a lot of price action on Monday. I shouldn't say price action because you can have rapid price action without volume. What I meant to say was I don't see a lot of volume on Monday.
Mm-hmm. No, and I will be trading. I've taken trades today and I've hedged today, but really, and I popped in the lounge this morning. One thing we do with our pro members over at Tackle Trading is we have that coaches lounge, the trading lounge every morning. And I just popped in to say hi to the team and talk for a few minutes. And I said, guys, for me going into the weekend, it's theta, it's hedging, and it's balance. I want to enjoy my weekend, not worry about whether the market's going to go up or down on Monday. It's just too weird right now to take a lot of excessive risk on a day-by-day basis, Matt. Just kind of steer clear of the risk is where my mind's at. Let's move on to the dollar. Cody asked you a good question. Did the dollar break its range? And I think it's still neutral in a range up on the top. In fact, I was ranking all the currencies this morning, and I've got the dollar just ever so slightly bullish, not aggressively at all, more neutral. But if I was going to lean one side or the other, I would assume the upside. But what's your take?
Flat out neutral. I'd put it 50-50 until we see it break one way or the other. You had an edge last week. There's no edge now. I got this flat neutral between two ranges. The ranges go from 96.20 all the way through 97.70, and so anything in that range is just neutral. Obviously, you're sitting.
Your candle's hiding behind that line right there.
It is. It's in that zone. But no, I don't have it as a break yet.
I've seen money flowing into the Japanese yen in the last 3 weeks. They're seeing it as a safe haven. Is that the carry trade developing, Matt? Are those asset managers just looking
into the yen and out of the dollar on the carry trade? No, that's not the carry trade. That's safe haven stuff over there in the Asian market. So if you'll remember, we had a few negative economic reports coming out of China and out of the Asian zone over the last few weeks. Mm-hmm. That's safe haven stuff coming into the yen. So if you'll recall, there's three currencies that act as safe haven currencies: the dollar for the West, the Swiss franc for the Eurozone, and the Japanese yen for the Asian area. So that's more negative economic aspect coming out of the Asian markets, flowing money coming back into the Japanese yen, because if you're buying the Japanese yen, you're getting paid. I mean, the Japanese yen interest rate right now just pinged to a negative again for the first time in the last year. And that was literally today. So if you're buying the yen, you're losing money on the carry trade. So no, that wouldn't be the carry. Yeah. The carry right now, amazingly, the carry right now is long dollar.
Is it? Because the interest, the other ones have gone so negative recently.
So negative. Yeah.
Swiss franc also showing a little bit of strength. They carry a negative interest rate, which is just fascinating to me. The pound is looking like a good bear retracement. There's some currency setups, Matt.
Yeah, the Swiss are carrying a negative interest rate for completely different reasons why the Japanese are carrying and the Europeans are carrying negative. The Swiss are carrying a negative interest rate because they don't want people buying the Swiss franc. That's why they're carrying a negative, and because that will offset the peg between the Swiss franc and the euro, and that will hurt the Swiss economy. So no, they're carrying a negative simply because they don't want people to buy the Swiss franc. The Japanese are carrying a negative because they can't figure out their stagnation situation over the last 30 years.
Yeah. Moving on to the commodity market, give me crude oil, if you would. By the way, and it's a real tie-in between currencies and commodities. The Canadian dollar might be the most bearish of all the currencies, major currencies right now that we track. It's just ugly.
Yeah. Yeah, we've hit that a few times in the Forex report.
Oh, Canada. I know. Crude oil is still aggressively bearish. I still have a very aggressive stance on this one personally. I know that it had a good green candle yesterday, Matt, but that downtrend and the raw fundamentals and emotion behind how much it has gone into this bearish movement, they exist, and they're going to continue to exist. What's your read on it technically?
Technically, just slowing down around the 45, 46 handle. I don't think this is a good bearish trigger yet.
Yeah, I don't think it's triggered. I think it's got.
I don't think it's a good bearish trigger right now. Yeah, it's tough because you certainly could trigger. And when I say trigger, I mean from a swing trade perspective. Mm-hmm. A day trader will approach this completely different. For example, if I'm day trading this, Tim, and I see this very clear support channel right there about 44.40 by 44.50, you break under that, not close. You break underneath that. That's a good day trading signal. Okay. Yeah. That's a good day trading signal. So when I'm talking about it hasn't triggered yet, I am talking about it from a swing trading perspective. And the reason I don't like it from a swing trading perspective is because I just don't like one day retracements. It just doesn't fit who I am as a trader. I like to see it come back up into these old support channels, new resistance. I would love crude to come back up into $48 to $50, give me a pivot at that point. So no, I'm not looking to get into any new trades on a short crude on any type of confirmation on a pivot. Day trades, yes. Swing trades, no.
Give me /RB. I don't know if we've ever had this chart up on the halftime report.
We look at it every Friday in this counter report, though.
We sure do. And I want to do something real fun here, real quick and impromptu with our halftime crew. What's the price of a gallon of gas where you live right now? Because I read a report recently, Matt, that 9 states in the U.S. have gone below $2 a gallon. right? And everybody keeps talking about gasoline prices dropping, that's good for consumers. You've made the point many times. It's not good for consumers. It's usually an indicator of a very weak economy. The way crude oil goes is the way gas goes. You'll notice that chart is almost a mirror image of what the crude oil chart is.
Yeah, I mean, it's just getting absolutely smoked right now.
Look at these numbers. Hero, $1.98.
What are we at? What are we at here in Salt Lake, Tim?
Dude, I don't ever look. I just run the credit card.
I don't care. I honestly don't. Although I did complain the other day for the first time in a year. I'm like, this is some BS. Diesel, because my truck's a diesel, right? Diesel is like $1 more than gas. This is discriminatory behavior to diesel trucks.
Yeah.
I was just being a little facetious and joking, but
you know what's incredible? Look at these numbers, Matt. Look and think about this, guys. How much taxes are impacting your per gallon at the pump?
It's Daniel Williams. Like, I'm paying $3.30 and the price per gallon is $1.29.
In Texas, God. It's 177. That's Michelle and Jim. I know where
that's because Texas is legit. That's why.
Oh no, I don't remember 19 cents a gallon.
Oh, no. Hey, Jim, I don't remember 19 cents a gallon, but I do remember like 75 cents a gallon. And yeah, it's never going there again. But
hey, they might keep heading down.
The price,
I don't know.
At the pump. No, RB can go there. Doesn't mean the pump has to go there.
Well, and you'll notice that this is really interesting. We noticed this with silver and other products as well, Matt, that the actual price of the raw commodity is different than what you pay for premium. Yep. Like when silver's going for $15 an ounce, you're going to pay 17 or 18 if you're buying minted coins.
The dealers got to get paid.
That's right. There is always the middleman cost. Yeah, for sure.
But there's a lot of middleman with oil and gas. There's not just the dealer, right? So obviously you have a markup, and then you have, the oil producers that got to get paid. You got the commercial companies, the gas stations that get paid. You got the suppliers that got to get paid. You got the municipalities that got to get paid. You got the government and taxation that's got to get paid. And depending on the state you live in, a lot of those might be a little higher. So you take a good old fashioned conservative state like Texas, you got underneath $2, and you go out to LA, and I see, Dan's paying $3.66 in LA, and you're thinking, wow, but the price of gas is consistent to everybody. Well, that doesn't mean you don't have more middleman in LA than you have in Dallas.
Agreed. You are going to get the middleman, the distillers, and all those different groups that come in. By the way, inventories did rise again. Everybody thinking OPEC can control all of that. Clearly, there's a lesson in economics right now. They cannot control the short term the way that people think they can.
You don't need a long historical lesson to realize that they tried to do that in 2014 and they failed.
Yeah, and market went completely into a bear market. And assuming that it's going to go back up, I think is wishful thinking for oil longs right now. Who's long oil right now? I mean, come on. Okay. Who in the world would be long the commodity market when it's been crashing for 3 months in a row, right? That wouldn't make any sense to me.
No, I mean, no. Of course, nobody's buying at 65, 60. Well, I shouldn't say nobody, but you shouldn't be buying at 65, 60, 55. But I could see people at 45 start saying, okay,
investors, I guess.
Yeah, not traders, but I'm saying investors saying, hey, listen, oil's been crushed. I can go pick up oil at $45 a barrel right now. Oil's an inflationary product. I can write covered calls on USO to offset any type of loss. I could understand long-term investors picking up oil at a cheap price under 50.
Yeah. I guess it's just time frame. Obviously, if you're investing for multi-year time frame in like a retirement account, or you want to pick up assets, I get it. Of course.
Like I own USO, right?
Yeah.
And I'm going to add to the position. I like doing covered calls on USO. So yeah, is people who own oil upside down on long-term investments? Well, it depends on how many covered calls you've wrote, and it's depend on when you bought it and dollar cost averaging or whatever the case might be. But I'm just saying, I could understand long-term investors picking up oil under $50 on USO, writing covered calls, because oil is an inflationary product.
Sure.
Oil's not going to stay under 50 for the rest of our lives. And I'll just say this. I said it last time when oil was like at $30, $40, $35, $40. I said, hey, guys, listen, I can write a naked put at $30, and if it goes to 30, I'm going to take possession at 30. And if it doesn't go to 30, then I just get to keep the cash flow. But even if it goes to 30, and even if it goes to 25, and I remember saying this, I don't care if I have to buy it at 30, even if it goes to 25 or 22, because I know oil is going to be above $100 a barrel in my lifetime again. And maybe that's not for 5 or 8 or 10 years or whatever the case might be. But I want to ask our halftime crew this: how many of you believe that oil will be $100 a barrel at some point in our lifetime?
I think it has a delta.
I'm saying at some point in the next 10 years. At some point in the next 10 years, how many people believe that oil will be above $100 a barrel again?
Mm-hmm.
Or at 80, or at 90, or at 70, or whatever it is. And so if and I agree, I think it's going to be there as well. So I could understand a long-term investor saying, let me pick up oil at 45.37 right now. I'm willing to take the downside risk. Okay. I'm willing to take the downside risk because it's going to be an inflationary product, and oil is going to go up again because it typically does, right? It typically does. So yeah, I could understand that. Would I wait for a slowing momentum and a double bottom? Yes, I would. But I'm just saying I could understand that mindset and that mentality. Now, as a trader, oh, hell no. No, absolutely not. As a trader who's, less than, 1 to 2 weeks in a trade, no. You haven't been touching oil since I tried to pick it up off the bottom at 66.
If you're willing to take assignment, though, I do understand what Hero and Marie are saying in the chat, that they're selling a naked put deep out of the money on USO, not on the futures contract here.
No. Okay, let me be very, very clear. It's on USO, take an assignment.
Yeah.
You do not sell naked puts on futures right now. I don't care if you have a 1 delta and you're getting a 10% ROI. Expanding margin will blow you up, and it doesn't even have to get to your strike price.
I got to tell you, Matt, since I saw the pain in that guy's face in the video I watched from the guy from Orlando, I have not touched the futures market in 2 months. There's too many other ways to trade.
He should have had more pain, Tim. He was selling naked calls on natural gas.
Well, move on to natural gas. It's down 6.9% today. I was bullish. I like the opportunity. I still like the pullback.
Maybe that dude should have picked a different expiration date. It would have worked out for him.
C'est la vie.
You know what? I'll tell you, Tim. That guy is probably just puking his guts out right now, because every one of those strike prices would have finished out of the money if he would have been a month late.
Well, sure. Shoulda, coulda, woulda. I mean, that's gambling. Yeah. First of all, that's gambling fallacy 101. Anybody who's ever been around people who are emotional about money, they always point to how they coulda, woulda, shoulda.
If I would have just waited, if I would have just rolled, if you want to over leverage your account with naked calls on natural gas because you're greedy, that's the would have. That's the if. It's not what would have happened after it. It's it's before they made those trades. It was ridiculous.
I've called natural gas untradeable in the short term. In the commodity report last weekend where I did that video, Matt, I said, listen, until it settles in.
I'm getting excited.
And this is my take, and I'll get your take on this one as well. I am excited about a pullback into the old resistance, new support. But until I see volatility slow down, it's a very difficult.
You can't touch it.
Yeah.
You can't touch it. You still got crazy volatility here. But I do kind of like it that we're finally starting to come back down into these old support and resistance channels, moving averages, Tim. It was so crazy for so long that you just obviously could not touch it. And you're starting to see it slow down just a little bit, the volatility. You're starting to see implied volatility slow down a little bit as well. It's already been down 40 basis points off the high of 1. So you are starting to see it get back down into a normal range. And I'm going to tell you right now, I'm excited because UNG is going to be part of personal gold. And I'm excited about that.
Well, and you should be. There's no doubt about it. I mean, these commodities and even oil, going back to it, some of this stuff that you do short term in the market, you just avoid the risk of assignment, things like that, if you don't want to take it yet. UNG, though, I will be selling naked puts against UNG at some point in January. I'd almost guarantee it, Matt.
Well, and let me say something, because that fear of missing out is really, really, really strong.
Yeah.
But there's always an opportunity in the marketplace. If you miss something over the last couple of weeks, there's always going to be another setup, a new opportunity. It always exists. And so that's why, you and I are so patient when this stuff, types of price movements happen. It's like, okay, just hold off. Let everybody else play in that craziness. Let us just kind of sit up on our little ledge and let's just kind of wait. We're like snipers. Let's just kind of wait.
Well, and I think it's a mindset thing that every trader out there, halftime crew, and by the way, you have to understand this philosophy. You don't have to make the money today. Okay. Traders get so wrapped up and caught up in focusing on trying to make a profit every single day. If you're not a day trader, that should not be your goal. Right. And even if you are a day trader, you should focus on just applying your rules. It's what you said the other day, Matt. Don't stare at the P&L column. Same thing with UNG. You'll have an opportunity to trade it when it's ready, then take the trade and pull the trigger. You don't have to make that money every single day. You just have to focus on your rules and your execution and have a positive equity curve. Now, you should be making money over time, week over week, month over month, quarter over quarter, or year over year. But I don't know a single trader who's been in this business for a very long time who doesn't have losing months, Matt. Mm-hmm. Everybody does,
Everybody does.
You don't have to make the money every day. You just got to make sure that you stay away from risk, exploit the opportunities when you have them, and pull the trigger when they come up in front of you. Speaking of which, one of the best trades this week was silver. That was a clear entry point on silver. Gold, quick peek at gold as well after silver, but beautiful breakout and run, Matt. Silver was awesome.
Both of them. Yeah, both of them were great breakouts and runs, and we've been waiting for those, especially on silver at 15. But with silver and gold going back up and the market kind of showing the craziness over the last couple of months, I have seen a renewal of the hatred of Wall Street silver, making fun of silver and all that jazz. So just enjoy the breakout and enjoy the volatility. I like the breakout.
You like it when those Wall Street Twitter guys have to eat crow, don't you?
Yeah,
it's one of your favorite things.
Get the popcorn.
Popcorn ready. Yeah.
Get the popcorn. I know a lot of Wall Street traders. They're great. They're great traders, great people. There's nothing wrong with them. But we have fundamental differences.
Yeah, for sure. All right. We got about 8 minutes left here, Matt. Why don't we do a quick rundown of what a Bollinger Band is and how traders use it? I got a couple of charts we can look at as we do it as well. A few stocks that are in the news that have been up and down and whatnot. Lockheed Martin would be a good one. We could look at JP Morgan as well. Amazon, been very crazy volatile recently. Transocean was in the news here today. A bunch of stocks on the scouting report. Give us a quick rundown of what a Bollinger Band is, Matt.
All right, so let's just go to the ES. Let's just look at the ES here. All right. Okay, so let me remove my moving averages very quickly, Tim, because they can make it ugly. Okay, so what you're seeing here is basically, I just added a Bollinger Band to my chart. And John Bollinger is the one who created Bollinger Bands, and he created them back in the 1980s to help assess trends, volatility, momentum, loss of momentum, a lot of different things that traders look for, from a trading perspective. And as you can see, you've got 3 lines on your Bollinger Band. First and foremost, this is the lower band. That's my purple line. This is the upper band. That's what color is that, Tim? I need a color on that.
It's got to be like a reddish. I don't know, dude. I only go with the colors in the color box. All right, okay. There are only 8 colors to me, or whatever.
I was going to say, is that the 8 or is that the 281?
No. The original crayon box. I got 4 colors or something.
I'm going to call that a red.
It's red.
Let's just call that a red.
Yeah.
All right. So you got your red line, orange line. I like that, Cynthia. It's an orange line as well. But you got red, orange line up there. That's your upper band. And then this blue line, I'll call it the mean or the mid. This blue line is an exponential moving average. And there's 2 types of moving averages. You have a simple moving average and you have what is known as an exponential moving average. A simple moving average like the 20 SMA, 50 SMA, 200 SMA, those just are track average closing price over a given time frame. And so they take the closing price and then they average that out over a 20-day time period. In an exponential moving average, and a lot of traders like exponential moving averages, but an exponential moving average is basically a weighted moving average, which will give greater, credence to right now versus say 9 or 10 or 13 days ago. Mark, Coach Mark over there at Tackle, and you guys all know Mark very well. He comes on the show and he goes on. He handles a lot of the coaches. Traders lounges over there at Tackle as well, but he loves his EMAs. He loves his moving averages, and that's what this blue line is. That is an exponential moving average, and so it will be a little more volatile to the current price action. So what Bollinger Bands are is they help you assess ranges, momentum, and so on and so forth. Now, as you can see, as momentum starts to go to the downside, and it works the same way on the upside, as momentum starts to expand, you see the upper band and the lower band start to widen, get a little bigger, because momentum is now coming to the downside. Now, as you can see, it's retracing back up. Now, how we can use this indicator is a couple different ways. First and foremost, for a lot of credit traders, Tim, how would a credit trader use Bollinger Bands? Like somebody who's selling bear calls or bull puts?
Well, it's a reflection of historical volatility over time. So if you're looking at like a bear call here, you'd probably go above one of those bands because it's measuring those standard deviation ranges. If you're an aggressive credit trader, you'd probably just take that 2588 and say, at least that's the minimum level I have to play. But most likely, Matt, most credit traders I know would go above that 2821 or around there. I wouldn't have like a hardened rule that says I have to be exactly above it. It's kind of a gauge or a range that you're looking at up there. So around the 2800 mark would be a good credit spread, deep out of the money.
So two things you can kind of use this as for a credit trader. People that like to sell, bull puts, bear calls, or or legging into like a condor system with cash flow condors or whatnot. So for the first thing I want to kind of mention here is the entry into that trade. Now, Tim, with confirmation on the price on Monday or Wednesday of next week, I would enter into a bear call spread here. But a lot of traders will say, okay, let's wait for it to get into the upper end of the band, and then let's sell that credit up on top of up on top of the band. And so that's number one. So as it gets into this exponential moving average or slightly above it, a lot of traders will see that as it's overextended to the top side, and they'll start to sell credits up into here. The second point is exactly what Tim talked about in terms of making the decision to get into a bear call at this point. You'd want to sell above those bands. Now, as you can see here, Tim, you see the Bollinger Bands get a lot tighter. You can see the kind of the volatility get in, real kind of tight. At that point, it's because you're not seeing a lot of volatility and you're looking for some type of breakout condition. And as you can kind of see it come into the bottom end of the Bollinger Band here, in a very tight range right there, look what happens right when it breaks that Bollinger Band. Boom, price just gets absolutely crushed right there. Now, there's a lot of different indicators that you can use to kind of help you assess those same type of things. MACD, RSI, the shaken money, stochastics, moving averages, historical price action. But Bollinger Bands is just one of those ways you can help to understand his volatility and, getting in versus, where to sell above in terms of credit spreads, understanding the mean, understanding retracements, because this exponential moving average will act as a resistance zone now. So that's kind of how you use it and whatnot.
Well, there's very, very good. Everybody, I appreciate that, Matt, first of all. A couple of other things that I like to use Bollinger Bands for, and I don't use them that often, but they can replace your moving averages. It's a good question that Paul had here. What is the middle SMA or EMA that you have built in there? And I think the default on a Bollinger Band is the 20, Matt, for 20. The midpoint.
It's 20.
Yep. And another thing, you can change the amount of deviation that you want. If you want a 1 standard deviation band or a 3 standard deviation band, there are traders that I know that will build more than one of them. Yeah.
Yeah, the default's 2.
That 68% range.
Yeah. And that's the same as the probability cone, by the way.
The other thing that you can use Bollinger Bands to assess, and you ever been in the backyard on a summer day, Matt, you kink the hose and then you let it go and you start using it to spray down stuff. Obviously, you kink up that hose. When the Bollinger Band tightens up, it's a reflection that volatility is compressing
right there
and should expand at some point. So the distance is a reflection.
Well, and that's when you're looking for a breakout, right? So when those bands start to contract a little tighter together versus the historical norm. So if you kind of come back to, and by the way, this is a normal trending condition, but as you can see, as the bands start to contract over here versus what they were doing over here, that looks as there's volatility is starting to subside, and you're looking for some type of breakout at that point.
So if you have a contracting band at the back end of a long-term trend, that usually is a reflection that we are compressing. We're moving into a range, and we will get a break one way or the other. Give me a chart on, like, for example, AMD. You know, AMD had been, going up crazy for a long time. It had an expanding Bollinger Band, and now it just compressed here recently, Matt. Not quite very tight, but if that ever does come together, that's usually when volatility is settling.
This is tight.
Yeah.
This is tight in comparison to craziness.
Right.
It's still not tight though. It's just tighter in comparison to what was happening in September, October, and November.
There's not a lot of tight Bollinger Bands right now on the daily charts.
There's not a lot of tight ones. But Bollinger Bands can also help you understand ranges and trends, right? Yeah. So for a lot of traders who are new to the market and don't understand potential average yield or how to draw trend lines or, things of those natures that traders like to use, Bollinger Bands can be a very simple and easy way to understand historical ranges, as you can see in this trend develop. As it gets into the upper end of the band, it consolidates and comes back to the mean. Gets into the upper end, consolidates, comes back to the mean. Upper end, consolidate, comes back to the mean. So that can help you understand overextended versus retracements in a very standardized trend. Obviously, we don't have a standardized trend right now, but when we do find one, Bollinger Bands can help you understand ranges.
All right. Let's wrap this thing here, Matt, for a couple of different reasons. Number one, the market is dojing. And number two, I got to go get a haircut so I can get ready for our scouting report meeting. I'm going to hedge everything and shut down my stuff and come back before the end of the market day. Last little update here. I don't like the fact that I let you pick. I would have picked that.
I don't know why you do that, but because yesterday I think you would have picked down too, and it worked out in your favor.
We'll see.
But no, I'm glad you allowed me to pick. But that's how it works, Tim. If you want to bring a stake bet you got to allow me to pick. If I force the stake dinner bet, you get a pick first.
Oh, by the way, I just put a link in the chat. I want you to click on it because, and that's total trust, by the way. When somebody just tells you to click a link and you do, that means that you trust that person.
If you ever screw me on that, I will never click your link again, buddy.
No, it's a trust fall, my friend.
It is a trust fall.
You actually have quite a few vegetarian vegans in your family, and I thought this was one of the most interesting stories. Did you see this?
I saw this article today. I didn't see this article, but I heard this earlier this morning about a $1 billion investment in a no-meat burger. And is it called the Incredible Burger?
I think I'm looking at the story now.
Yeah, we're definitely not going to listen to that ad.
I don't know what that ad is, but
whatever Mark promotes, that's our ad. We don't get
Garden Gourmet makes an incredible burger. I think Nestle is making a different kind of burger. They think that it's going to be $1 billion industry within 10 years. Very, very interesting.
Listen, I don't disagree with that. Yeah. My wife, two of my daughters are all vegetarians. Mm-hmm. And I'll tell you, I've had a few vegetarian burgers over the last couple of years. I don't like them. They need to get better. And if Nestle can add a better vegetarian burger, I can support it.
Nestle. And the one thing that grabbed me in the headline, not just the vegan burger, which I thought was interesting, purple walnut milk. I don't know what that is.
I'm out. That's a new age. That's some new age bullshit. I'm out. I'm done. No. Halftime crew, love you guys. I'm not going into the purple milk. Whatever. What was it?
Purple walnut milk.
Oh my god. Oh my god.
Oh goodness.
It's getting too creative. There's 50 different versions of rock. What's wrong with just rock?
You know.
Now I got purple almond. No, I'm not doing it. I'm out.
Well, and you know what this story makes me think of as well? Your conversation about crude oil. Everybody thinks crude oil will get back to 100. there are scenarios, maybe the technology changes and we get rid of our need for crude oil, Matt. I don't think that happens in the short term.
That ain't happening in my lifetime, so I'm not going to worry about that.
I gotcha. All right, guys. Halftime crew, thanks for being here. Always appreciate it. We will be back.
Mark's comment on the purple walnut milk, Jim. What was Mark's comment yesterday, Tim, on the politically correctness? I don't think he went after you. I think he went after me.
I don't remember. It wasn't that bad.
No, it was very subtle to you. I think he decided he was upset with me and he wanted to take me down.
I don't remember. He did not make fun of me as much as he should have. I will say that.
He might have been feeling bad for your Bernankes the other day. He gave you pretty good on that one.
It's possible. All right.
All right,
guys, we're out.
Crew, have a great weekend.
Happy New Year.
We'll be here on Monday, right?
Yep.
So we will be here on Monday wishing you guys a happy new year. Come join us on Monday and we'll ring it in together. Thanks, guys. We'll see you on Monday.